Welcome back. This is a KTN special as we celebrate the World Insurance Awareness Day. We'll be having a great conversation so far, just tackling the key issues that the industry continues to face. And my panelists who are joining me from multiple locations are on standby to take your questions from you as you watch back at home, or if you're streaming, you can share your questions on our Twitter handle at KTN News KE. You can tweet me at Agina Abi. And remember, our hashtag for this conversation is Insurance Awareness Day. And you can also join us on Zoom with the event code being National Insurance Awareness Day. Well, gentlemen, just before we went for that commercial break, I was directing the key issues now to Mr. Morania. We've heard it from all of you how the industry is literally on its knees in terms of revenues. But are there opportunities? Are there innovations that can come out of this pandemic? As they say, every storm has to come to a close, Mr. Morania.
Yes, opportunities are there. And yes, I agree the impact on the industry basically has been described by my colleagues, which is a shrinkage, can be summarized as a shrinkage in premiums which are coming through because a shrinkage also of the revenues that are coming through, a spike in claims in certain classes. Medical is expected to have the biggest, but we also have seen and expect claims to come in through other classes like where travel is concerned or event cancellation. But this negative environment of a negative impact from the pandemics, yes, there are opportunities. Because what we've seen in terms of operational tactics by various players now, remote working has become a normal.
Yes.
This is a situation where companies are discovering, maybe so much like now it is a norm in the West, in Europe and in America, it's actually possible to work at home. It's actually possible to monitor the output of the employees working at home. And in the fullness of time, this is likely to become a new norm where actually a lot of businesses don't necessarily need to come full blast, 100% back into office setups as we were before. Now this goes hand in hand with the great levels of digitization, a lot of a blessing of technology.
Yes.
Staff have to have every digital gadget they require, connectivity, protocols for security of that information has to be set up. Reporting structures become different, like we've adopted a system where you may want to have weekly reports as opposed to longer periods of time. Managers have to have their own coffee, so to speak, with staff, digitally actually. So it is changing the way we work. The mindset also will need to change as we go forward. The organizational structures may have to change because now the normal traditional hierarchical structure where you're from the top to the bottom may actually start slowly being replaced by a scenario where you have teams, the core teams of what is actually generating productivity and channeling it to the various other areas. Right. So also is a working systems like a very close cooperation of IT and say the audit or the review functions in a department. So it's really changing, and these are opportunities. Maybe just to mention one last one, the area of products also. This pandemic has revealed a lot of gaps in terms of the product offering to the market. A lot of products actually exclude pandemics, being the contract between the insured and the insurers. There are cases also where the pandemics or certain aspects of it may be covered by an insurance policy, which is also not covered by the overriding reinsurance treaty on it. So again, these gaps have been exposed, and to me it becomes an opportunity where the insurance companies as well as the reinsurance companies, having seen where the gaps are, will need to ask themselves, what can we do in terms of now closing this gap going forward? For what kind of a premium would you be closing the gap? What can we take into contract as a payable item or risk? And what can we still continue to exclude, being an aspect of pandemic which we know is traditionally excluded by insurance and reinsurance. So those, I would say, could be some of the silver linings, so to speak, from this dark cloud.
Very heavy issues you're raising there, Mr. Morania. Perhaps walk us through, as one of the players in the industry, there was that controversy at some point where people didn't know whether COVID-19 was going to be covered by insurance companies. There was a lacuna of sorts. Was this resolved eventually? I'd also be keen to hear the regulator in the House to also give us an assurance. But you go first, Mr. Morani.
Yeah, it is a gap. It's what you may want to call sitting in between the stools in the way the coverages are designed. Like I said, there are certain policies which may expressly cover certain risks, and some might be silent. And even when, for example, a direct insurance policy could be covering a risk, if it is not properly dovetailed with the reinsurance treaty that comes to protect it, then an insurance company might find that it is giving a coverage which its reinsurers may not be covering, and that creates a gap in there. Right. To me, it is an area, of course, of discussion. It's an opportunity, like I said, which can be discussed between the insurance and the insurers to see how best to deal with it. It is also an area probably that calls for payment of ex gratia claims if it was really a genuine, kind of lacuna, as you call it, because insurance also needs to wear a human face, but at the end of the day, it's still a business, and contracts are in place to be respected. So there's a bit of room for discussion there to see how best to address the lacuna.
All right, and to Mr. Kiptum. A very pertinent question, issues actually coming out of Mr. Morania around how do we secure the consumer at the end of the day, because someone is diagnosed with COVID positives, I beg your pardon. When they go to the hospital, is there assurance from the regulator that the insurance firms will not abandon the patient at the hour of need?
Thank you. Yes. What happened is that once these things arose, we looked at contracts for all the insurance companies, especially the ones on medical. And most of them were not excluding pandemics of COVID-19 of whatever nature. Apart from one or two policies and practices that excluded, the rest of the industry covered pandemics. And the directive from our office was that they should cover everybody as per their policy that they assigned and agreed. And if they need to change, then they need to get to us and get our approval before they change any of those policies that included pandemics. Of course, we saw a number of people trying to change to exclude, which was not approved because it is.
Was there any action?
Of the package when the customer signed on it.
Was there any action?
Pardon?
Was there any action taken on some of these providers?
Yes. Well, those who attempted to change their policies, action was taken, and that was resolved. But most companies just proceeded with their contracts as they were.
All right. And
but just to add into what Morania said, in terms of gaps that became evident, there were a number of gaps in coverage that became evident because of this pandemic, or that were exposed by this pandemic. And I'm happy to report that most companies are dealing with them now, and they're addressing those gaps, like Morena said. And we expect that in the coming days, then the coverage will be provided to a large extent. We have also seen a number of business interruption issues that have come about, and gaps that have been exposed, which are currently being addressed. But of course, the most important thing here is that we expect increased coverage will follow, especially now that there's adoption of technology that will make it easy to distribute and pay claims and underwrite. So we expect, yes, this COVID has exposed the industry, but they will come out better prepared to face the future.
All right. Let me pick a few questions from our viewers watching us from home, and we do welcome you to share your questions with us. And our first question is from @Gili, also known as the Icebreaker. He's saying there's a lot of motor insurance policy cancellations barely because motorists are unable to pay premiums. Perhaps I would like to take this to Mr. Gishohe. Would you want to take it up?
It is coming in three forms. One, there are those there are those policies which are expiring or which are coming to the end of the contract, and the owners of the motor vehicles, certainly because of issues of affordability, they are not able to renew their policies. Then there are those ones who may have policies which are running, and probably they had just paid part of the premium. And when the insurer now demands the balance of payment, then the outright decision that most of these customers are taking is just to cancel the policy, because they are not able to pay the premium. So those are some of the issues that are running around the issue of affordability. And you also realize that a good number of people, maybe not very many people, but a good number of people may have lost their jobs. So if you do not have an income, insurance now is certainly not a priority, because what you need to think a lot more about is putting food on the table, or probably just paying for your rent. So if you have to take between having to renew your motor insurance policy or buy an insurance cover for your motor vehicle, maybe you don't even have money for petrol, leave alone buying insurance cover. So we have witnessed a lot of cancellations, and we have witnessed a lot of non-renewals. All
right. Well, how does this make you feel, Mr. Shigoli, when you see cancellations at the same time you're trying to ensure that the business survives post-COVID? What sort of mitigation measures do you feel need to be put in place to safeguard players in the industry?
Yes, first of all, I need to make it clear that, we are all in the industry, we are in Kenya, and the situation of COVID affects all of us, our consumers and the industry players. So what we want to do is ensure that we are there, we survive to also pay claims. That's why there could be a few discussions around how insurable is the condition. But I am not trying to contradict the discussions that were earlier. It is just to say, insurance collects is a pooling together. You pool together. You collect premiums from many people, little premiums from many people, so that you pay claims for a few. So if you have collected premiums from a number of people and an equal number gets into hospital, then you may not exist. So that's why the discussion of whether or not the pandemic is insured is there. And we are going by the policies that members have by each underwriter. So to ensure sustainability, just straight to your questions, is to make sure that at the service point, there is also no exploitation. People are not taking advantage of the situation and billing or charging abnormal rates. For example, in some facilities, you would pay up to the range of 1.7 million, and I've had one underwriter had a client who spent 10 million on the same on COVID-19, and there are facilities that you can also spend up to 135,000. So and you recover just like the other person who was at a facility where they paid 1.7 or 9 million. So it is just to work together, the consumer, the clients, and the insurer to work together to ensure that there is sustainability in terms of offering care and supporting government in its efforts to ensure that the citizens are safe from this condition. And that's what will make us sustainable. The other issue is the way we design products and distribute. And I think one of the panelists had already covered that. So it is just to be able to design products with the pandemic in mind, because now we've noticed the patterns. We know globally that 3% of the people, 80% of the people who get are asymptomatic, and those who are serious are like 3%, could require ICU treatment, and 3% or to 5% will be mild, requiring admission, but not very severe. And with that particular trending, we are able to design and come up with the better products that will take care of these conditions and keep the companies or the insurers also in business. That's what I would say for now.
To you, our Commissioner of Insurance, there's a question here from Mr. Washington Deguer, who is asking around the value-added tax on commissions by the agents. Was it a move that was thought through? Because he's arguing that it will really impact on the agents hard. What would be your comment to this?
To say that the impact of payment of VAT would be felt by consumers of insurance and, of course, the agents and the brokers and the insurance companies. But this is something that is being looked into. But as it is now, it is the law, and we must play our role as dutiful citizens by paying our taxes. The impacts will be there, but this is something that will be discussed going forward. And yeah, but there definitely will be impact on consumption of insurance services, and more so the impact on service providers.
Mm-hmm. And there's still another question here to Mr. Morania around how can Kenya reposition itself when it comes to adoption of technology, and of course, also ask the other panelists, why is it that penetration continues to be quite low?
It's a good question, I would say. Actually, it's a question we ponder with, and it's a question that actually reality has forced us to look at it. Like I mentioned, the way that we traditionally worked in an office setup, where all the meetings are physically held in the office, where every manager is able to walk to the staff and deal with them, where everything is actually done within the four walls of the office building, is changing and has changed very drastically. We positioned ourselves by being able to work off-site. At any one particular time, only 50% of staff is in the office. The other 50% is working from home, and that goes on for a period of 2 weeks, after which a rotation is done and those who are at home come in. The idea being to depopulate the office. And as we do that, we also told ourselves service must not suffer. So we have situations where connectivity to all the IT resources of the office is available to staff at any time, actually on 24-hour basis. That, of course, has brought in the new challenge about ensuring that security of that information is available. We went to the cloud for purposes of storage. We put in place protocols of IT trying to ensure security of this information. And like I also mentioned, trying to check the progress of work done each week by the end of that week, and having a plan laid out for what to be achieved in the following week. All the times we are keeping in focus the strategic targets of the company to make sure that as the COVID comes through, it does not wipe out the financial and non-financial targets. And on this, I would say that we think it is working well. As of this week, as of last week, actually, if I could comment in terms of the premiums, we haven't seen a lot of impact. Even the claims have not really flown in a big way, because like the other panelists have mentioned, the expectation is that it is largely medical, which could produce quite a lot of enhancement in terms of loss ratio. On the life side, we haven't seen as much. Largely because, like we know, in terms of mortality, it hasn't been so disastrous for the country. One life is important, but it is not as was expected. So what we are doing at Kenya Re is to try and shape ourselves up to the new environment and react to it.
All right.
Including things like training. We are doing it on virtual. Meetings are virtual. Everything is really gone into the technology space.
All right. And let me take one more question from our viewers. Nelson Ougo is asking, how has the new tax laws on the VAT, has it affected the insurance sector? Would you like to take this question, Mr. Gishuhe?
Yes, I'll try to. The law introducing VAT on brokerage and agents commission was introduced on the, I think on the 24th or thereabout of the 24th, 25th of April this year. And the first installment, VAT installment, was payable on or around 19th of June for the full month of May. The fact of the matter is that the whole issue of implementation of VAT on commissions has been a very disputed position, particularly so by insurance companies, for the simple reason that insurance companies are not vatable. And therefore, if the assumption is that the insurance companies are going to be billed by insurance brokers and agents or with the VAT, then that is certainly going to become an expense on the insurance companies, for the simple reason that insurance companies cannot now reclaim the input VAT. And that by itself has brought in a lot of confusion as to who is supposed to pay the VAT and whether the VAT is, or whether the commissions, the insurance commissions are inclusive of VAT or whether they are exclusive. That is a matter that I can very clearly put across that we have actually sought the intervention of the courts to really clarify, one, who should pay VAT, and if so, would VAT be extracted from the commission as we know it, or would VAT be an additional cost to the insurance companies?
All
so
right.
It's a matter that we are seeking clarification.
Okay.
At the moment, because I need to explain exactly what is happening at the moment.
You have less than 30 seconds.
We have some insurance companies who are paying VAT or who are retaining the VAT or who are paying the VAT as part of the commission. Then there are those others who are paying the commission as an extra cost over and above the commission that is charged by the brokers and agents. So we have that confusion. So it is not very clear exactly at the moment until probably we get some determination by the courts as to how we proceed going forward.
All right. Of course, we can't further elaborate on this issue being a matter that is before court. And we have a question from a viewer on Slido platform. And his question is directed to Mr. Morania, the CEO, Kenya Re. When we talk of ex gratia claims being paid by insurers, do you as reinsurers support such actions, or will it be left to insurers?
Ex gratia, by its definition, means the claim is not payable, but for consideration of other factors, especially business considerations or relationship considerations or circumstances of the claim, the insurer or the reinsurer who is paying it decides to keep aside the contractual terms unpaid, kind of to put a human face on the business, or other reasonable things that the contract says should actually not be paid. So generally, yes, with insurance companies have paid an ex gratia claim. What we've seen, the trend is that they'll also approach their insurers to ask them whether they would take their portion of that claim in terms of a gratia. The insurer looks at it in terms of the merits or demerits or the circumstances of the claim and makes up a determination. And this determination might be to decline, that is the worst case scenario, or to accept all of it, that's the best case scenario where the ex gratia is 100%, or any proportion in between there. So it's difficult to say we'll support or not support. It really depends on the merits of the case. Like I said, where there are gaps which have been exposed, a bit of element of the human face into it comes in. And for Kenya Re, you're talking about Kenya Re, yes, we've paid several ex gratia claims, not just related to COVID, but like I said, depending on the circumstances of the case, the relationships, the business interest, it is a case-by-case kind of a decision.
Thank you. Mr. Shigoli, would you also want to weigh in on this?
Yes, we, as AAR, we also settle some claims on ex gratia basis, and We discuss with our insurer. As Mr. Murania mentioned, some cases are considered, some are not. But ex gratia is basically a consideration outside the normal claim payment process. So for normal corporate governance, you are supposed to present such ex gratia cases to the board for also approvals, because it's if it is declined by the insurance, then it becomes an expense to the insurance company beyond the claim payment process.
Mm-hmm. Interesting. Let me take a quick question now from a viewer asking a question on Twitter. At Kamau K. Boniface is asking, what is the insurance industry doing to protect small businesses in the country from any other future pandemic? We know most of them are closing businesses now due to COVID-19. Thank you for your question, Kamau. This question is open to any of the panelists to respond to. Perhaps we'd like to direct it first to Mr. Kiptum.
Thank you, Boniface. I think, as you may be aware, the authority will very soon be introducing microinsurance concepts, and will be licensing companies that will do microinsurance. And this will basically be focused on small businesses, and business interruption would be one of the things that would be covered at small volumes, and quite a number of them at the same time. So we think that this would be quite affordable and accessible to small businesses and SMEs in the country. This we think will go a long way in strengthening businesses and enabling them to meet their obligations when they get into difficulties like these pandemics or any other business interruption modes.
All right. Perhaps any other panelists would want to chip in on this? Mr. Gishui?
Maybe I would direct my contribution in the direction of medical and probably life insurance products. When we were faced by this pandemic, then a number of insurance companies, maybe not many, but a few, have gone back to the drawing board, and some of them have already designed insurance products for the pandemic and for any future pandemic, for that matter. So we already have one or two insurance companies who have already rolled out an insurance product to expressly cover pandemics, whether COVID or any other. The other thing that I know insurance companies are doing, with a view to even making insurance costs come down for purposes of affordability, and therefore for purposes of Kenyans in future to be able to partake of insurance services and products, is by use of technology. I know it has been talked about, but I think I would want to expound on it a little to show exactly how it will make it, how use of technology is likely to make it cheaper and therefore more accessible to insuring public. And I would like to go to motor, I would like to go to life, so on and so forth. One of the biggest costs of insurance is actually the distribution cost. And if we were to adopt technology, and I am happy that a good number of insurance companies are already adopting technology. We have a number of insurance companies who are now selling motor insurance online, end-to-end, including a payment platform. What that will mean is that without the intention of killing the intermediaries, what that will mean is that the cost of distribution will come down substantially. And if the cost of distribution comes down, then the issue of pricing of these insurance products can be looked into afresh, and therefore making it a lot more affordable to the consuming public. We also have a number of insurance companies who already have designed life insurance products that they are distributing online. If I can expound on this a little more, the cost of distributing life insurance products is so high, sometimes it goes up to about 50% of the premium that is paid by the client, 50% goes to distribution costs. So if we are to cut down on the cost of distribution, then we are likely to structure our products in such a way that we are able then to accommodate a lot more Kenyans, because we will make our products a lot more affordable and therefore a lot more accessible.
All right, thank you so much. Let me take another quick question on our Slido platform. We have a question here. Someone is asking, the cost of insurance for non-employed persons remains exorbitantly high. For example, I remember getting a quote of approximately 180,000 to get an outpatient cover of 200,000 outpatient. In the spirit of pooling, if this comes down, would we see more uptake? What is the regulatory position? This is a very delicate question. Perhaps I'd like to get Mr. Shigoli and Mr. Kiptum to chip in. Before we get your responses, let me also take another question. We have another question here. My question goes to the CEO, Kenya Re. Actually, we had already sampled this question on ex gratia. Let's move on if there's any other question. All right. Let me get your quick reactions to this first question on the cost, which was clearly taken on very strongly by Mr. Gishui. What are your thoughts, Mr. Shigoli? When we see Kenyans are determined to get insurance, but when they go and they're given quotes of 200,000 shillings, can they be able to pay this?
Thank you. Before I pick that question, I would like to mention something on the earlier discussion of supporting small and medium enterprises. One way is having products that are monthly in nature, allowing them to pay smaller premiums each month. And another way which products can come up to support these SMEs is through business continuity cover, business interruption cover, which they can also purchase that may include some of these cases that affect business. Remember, COVID has come in and we've noticed how it has interrupted businesses, especially small and medium enterprises. And such covers would be important, but they require critical mass. So if they are created and people don't purchase, then they become unaffordable. The same applies to medical insurance. Now straight to your question. The purchasing public is, let me say, around 50% of the insurance policies have an outpatient. And we have around, for private insurers, we have around 1 million members, and 50% have an outpatient. Now, the outpatient, because of its frequency of use, you find more than 50% spent over 80% of the benefit given. Remember, the benefit is like 200, and premium paid is, say, 80. And if over 80 of them spend more than 100%, then the pricing becomes a bit steep, because you are pricing to ensure that you cover the cost of the claim and the expense for distribution and management of the scheme.
All right. Let me also take some more questions right now on social media. There's a question here from Tommy Kibet. He's asking, how stable are insurance companies amid this pandemic, considering the industry is already struggling with high loss ratios? Will delayed or lost premiums and reducing investment income deal a major blow to the industry? Mr. Muirania.
In terms of stable, I would say they are stable. A pandemic is institutions have resilience. We don't expect insurance companies to come down because of this one pandemic. What is likely to happen is that, as has been described by various panelists in the course of this discussion, there is a downward pressure on revenues, which is quite evident, which means in terms of collected premiums, they go down. There is likely to be escalation in the claims, especially the medical, as has again been described. So the overall profitability of the industry is expected to dip for this year. That is not to say the industry is unstable, in my opinion. Is to say that the performance for this year is not likely to be as sterling as it was maybe last year. And going forward, some of these impacts, because of the investments the insurance companies have to put in place, especially on technological adaptations for the operations, they may also affect subsequent periods. Investment returns will also be lower, because once the revenues are not in, of course, the investment also gets impacted. So what I see is more of a less splendid performance in this year rather than an unstable industry.
All right. Let's take another quick question here. Medical insurance have turned down my renewal, my insurance medical cover because of pre-existing conditions, that is diabetes, which is on borderline, and on medical care because I am over 60 years. I'd like perhaps to direct this question to the regulator in the House, that is Mr. Kiptum. In regards to this question, what would be your message, especially to companies that are not abiding to the contract?
I think it's a requirement that they abide with their contracts. But of course, if it comes to renewals and they decline, I think they have the freedom to decline. But at that declining, they should be able to give you the conditions, what you need to do for them to be able to renew such kind of policy. But maybe just on that, to add on the other note is that the authority has been looking at those issues of pre-existing conditions, chronic conditions, and the kind of limits that have been given by most insurance companies. We are reviewing this. We are working together with the insurance companies, and we shall be advising consumers of insurance services on what they will need to do. And we also want to make them to be aware and to be conscious that when they're signing a new insurance contract, they check those clauses and the exclusions, the chronic conditions, and those kind of exclusions that would be put in such policies, so that you are aware what you are getting into, but don't get into it at the point that when you need help. But maybe the other thing that I just wanted to comment on is on the issue of solvency and stability of insurance companies. This is something that we constantly look at. We keep an eye, we monitor very closely the performance of insurance companies in terms of their solvency and their ability to meet their client needs. This, we want to assure Kenyans that we are on top of it and we are monitoring, and should there be anything, we will let you know if there are challenges and problems on solvency and stability. And of course, we require companies to do stress testing and ensure that they are able to continue despite the challenges that are here and there, and that may have been caused by the pandemic or anything else for that matter.
All right. And still staying with you, Mr. Kiptum, briefly, there's a quick question here from Samuel Waweru. Is asking, from the IRA website, the deadline for application to participate in the sandbox is long overdue. What can an innovator who would like to participate in the sandbox do?
I think for now we closed. It's a competition that we closed, and we are considering those applications. We will have a second round. So we will let them know when they can be able to participate.
All right.
So he can continue to hone his skills and prepare his concept.
Okay. All right, gentlemen, we want to go on a quick commercial break. When we come back, we want to look at the strategies post-COVID-19. How can the insurance companies strategize and look at bigger opportunities and things that they need to go back to the drawing board and reassess as we move forward. Remember, keep tweeting, share with us your thoughts on our Twitter handle at KTN News KE. You can tweet me at Agina Abi, and our hashtag for this conversation is Insurance Awareness Day. We'll be back after this break.